Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Chris Dearborn. He is the managing director on Nasdaq's market intelligence desk. Chris, as always, great to have you with me on a Friday afternoon. Now I know that we're going into the home stretch every time you join me, and what a week it has been. We're looking for 2 weeks in a row of positive gains. That was not the narrative on Tuesday when we kicked off the week.
No, Tuesday was definitely a risk-off day, coming back off the long weekend from the holiday. But what's really happened is that the rhetoric from the China trade war has really dialed down a bit, and we got the prospect of conversations taking place in October, and the markets really, really like that across the board. You put that along with the dying down, really, of the protests in Hong Kong and a resolution there, hopefully. And then what's going on in Europe, it seems to be a little bit better. We'll wait and see on that. Overall, investors do not like uncertainty, and when you have the overarching macro theme there of uncertainty, especially with trade talks going on there, take it off the table, the markets do well. Look what happened in the end of August, right? They started less negative rhetoric, a little bit more positive rhetoric, and all of a sudden the market started to pick up a little bit. You know, net, the S&P is right back where we were at the end of July when we made all-time highs.
All right, well, it's great if you're a 401k investor. You picked up a couple shares at the dip, and that's what's great about these retirement vehicles. By the way, September 6th, Friday, is 401k day, which is so interesting because think about it. You kick off your week with Labor Day, and you end it with retirement. Very clever. The marketing folks are very clever in the industry. Let's take a look at our first chart here, the S&P 500. We're taking a look at the 52-week daily. Looks like we're on some key levels there.
Right. This is what we just mentioned, right? We're right back where we were at the end of July, right after we made the all-time highs, right? I love this chart. We talk about it all the time. It's a one-year chart. And you look at how it's faded from December when we sold off to the different dips here. You know, right now, August is looking like a potential buying opportunity. We'll wait and see what happens here. But you're looking at trading above all the moving averages. It's within a stone throw, 1.5% of the all-time high. And at the end of the day, it's telling you that investors are optimistic that this market can go significantly higher. And the S&P 500 is a good broad-based index for that indication.
You know what's so interesting about the month of September? It's like that 4 or 5 weeks where you have the earnings vacuum, right? So traders are laser focused on everything macro. So you have trade wars, you have interest rate conversations, you have the ECB, BOJ, Bank of England, and the Fed, all four of them within a week of each other coming out with rate policy decisions. There's really nothing going on in terms of the corporate space until middle of October. That's why you get this seasonality of some volatility in the market.
The macro factors, as long as the political aspect of it take a hiatus, the macro factors aren't as bad. The non-farm payroll number this morning wasn't terrible. People said it was a bad number, but if you dig a little bit deeper, right, the top line number, 130,000 jobs versus 160,000 jobs, a lot of it basically for the census being hired. What you're looking at there, though, if you dig past that number, is that you see wage growth month over month. You see wage growth year over year. You see the employment number tick up a couple of tenths as well. And the underemployment number, the U6, did tick up a little bit. So that's a little bit of a negative. So what you're looking at there is really a good enough report where people are making more money. Yeah, not as many people got hired as expected, but you have more people making more money, and at the end of the day, that's good for GDP, right? Consumer spend is a significant factor
And that's the
here.
bright spot and kind of what they're focusing on right now, because if we
I would focus on that too.
Well, if the consumer drops off at all, if employment drops off at all, I think, because a lot is hinged on
Right, you have super low unemployment. It's been a reoccurring theme for a long, long time here, and that's the underlying growth that we're seeing here, and that's the engine that a lot of these companies on the consumer side are seeing, and that's why you see those cyclical names leading right now. Consumer discretionary, tech, communications, all doing very well.
All right, let's go to our last chart here, 10-year bond yield. Another thing we've been talking about.
You know what? Yeah, absolutely. So Brian Joyce, our CMT resident, came up with this today for the midday note, and it's a good look, right? So the yield in the 10-year and the indexes for the equities usually moved hand in hand. They kind of diverged a lot since the middle of the year. And what you're looking at is, well, if people are buying stocks, they should be selling bonds. But August kind of saw that take place here. And you saw the low, you saw the yield curve invert between the 10 and the 2. And what you had here was concerns about that. So this is showing you that risk is back on. It's not going to happen in one day, but if you look at, it's a 30-minute chart going back a month and a half. So you see the end of July where our yield is over 2% and to where we are at 1.6%. We're right around 1.5, 1.6% today. You're seeing the bottoms down there at 1.44, and that's being people are buying bonds because the yield is being depressed. What this is telling you is that people are selling out of those 10 years and putting the money back into equities. And this is a good chart to verify that you are taking that risk on sentiment selling bonds and buying stocks. And this right here is one of those visuals that kind of puts it right in front of you.
All right, my friend. Until next week, thank you so much as always for joining us at
Thanks, Jill.
MarketSite. And thanks for joining Chris and I on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.